spending on data centers and other AI infrastructure this year by just four big tech companies is expected to total more than $670 billion, a larger investment as a share of the economy than the railroad expansion of the 1850s. And that was a bubble. Hi everyone, JJ here. Welcome back. Well, are retail investors in particular flying head on into an AI bubble, into the trap? Are going to be left holding the bag? That's what we're going to get into today. It's not financial advice, but I want to get into some of these stories, some of these headlines. We're going to look at a few stocks. Now, I've talked a lot here about Elon and his companies, Tesla and SpaceX over time, and they're definitely involved in this, which I will talk about along the way. But I want to go wider and, well, frankly, to get the motivation to these videos week after week for years and years into the future. I mean, we're into more than 4 years now, over 700 videos. So this is what I'm interested in at the moment. I am interested in what's happening with this stock market, inflated stock market, I think, and I do think it's an AI bubble. And I'm going to show you what I mean. We're going to look at some companies that have really had parabolic moves, and that's a sign. But you can see this headline here from the Wall Street Journal: all the money flooding into AI is a giant warning sign, this author says, James McIntosh. When companies as a group turn into sellers, it's a reasonable sign that stocks are very overpriced. So this is just opinion, and this is not financial advice. As I say, I can't reiterate that enough. This is not about what to do. I'm just laying this out here, my opinion, other people's opinions on here, and you can get the opposite opinion. I mean, that's one of the things about this bubble. You can get lots of different opinions, one way or the other, which is perhaps a sign that we're not all the way there yet. Like during the dot-com bubble, there were voices saying this is a bubble, but it did last for a long time. Some people thought it was a bubble in 1998, and it went to early 2000, March 2000 is when it started to burst. So these things can go on for a very long time, and I'm not giving any predictions about when. I'm just looking at the signs. And I'm going to show you some signs today of what I think. And I have been listening to different podcasts of people, very experienced investors, from Stanley Druckenmiller to Jim Chanos to Michael Burry to Jeremy Grantham, who have all been warning about this bubble or pointing to signs as well. But other people will say that they've been wrong as well at times. So, yes, there are lots of different opinions. But it is interesting to see what different people are saying. So this is another headline from the Wall Street Journal: the biggest risks threatening this high-flying stock market. Despite plenty of tailwinds, some investors still see causes for concern. No kidding. I mean, we've just seen SpaceX go out, right? As I speak, the last session in the stock market, it went down, I think, over 18%, but the valuation is still just amazing. I mean, it's just historic times, right? And this here, I like to point to the Schiller PE ratio. You can see here, if you're just listening to this, it's currently at 41.58, and the record was 44 during the dot-com bubble in December 1999. And so we're getting up there again. If you are seeing this on video, you can see this goes back in history, way back, more than 100 years, and you can see some of those peaks. And even in 2021, when I did think there was a bubble there, we had the SPACs, emerging tech, that did go down after that, and now it bounced back up, with the launch of ChatGPT, with this AI bubble. So it really did kind of save it from, I think, going down further there. And now we're way up higher. So you could see that as part of the same thing, really, I think. But there's only one metric. There are others, but there are quite a few others pointing to similar things. And here we have this newsletter, which I read, Will Lockett, who says the AI industry is panicking. Is the AI bubble bursting? So we'll look at that. And then I'm going to look at some companies that, as I said, wider than Tesla, wider than SpaceX, wider than NVIDIA, all AI related, that have really had these parabolic moves. So we're going to have a look at that if you're interested in that. But we'll go back to this, not just the headlines. All the money flooding into AI is a giant warning sign. So let's see what they say. What should you do if investors bid up your stock on the basis that you will be a winner in artificial intelligence, but your product isn't popular? Elon Musk has the answer. Use your expensive stock to buy other AI businesses. Now, which is a clever move. If you like there's all stock deals going on right now. And so basically, you could say that's free if it's really inflated stock and just buying things with that stock. SpaceX's $60 billion all stock purchase of Cursor, a programming assistant that popularized vibe coding, makes Musk a player in corporate AI in a way that his Grok chatbot hasn't. It is also part of a rush of stock issuance that should raise serious red flags, even among those who dismiss elevated valuations. And there are a lot of people who do that, especially in the semiconductor sector. And one of the companies is Micron Technology. And so they say, well, the P ratio is not really high because of these massive orders that have been coming in. And we'll talk about that in a minute, because back in the dot-com bubble, there was a company called Cisco Systems that was really the poster child of internet infrastructure, and it crashed. We're going to have a look at the graph of that. I'll show you what I mean. And so this graph is part of that article, S&P 500 price to forward earnings. We can see there back where this was 1999, and we can see the start. So it looks similar to the Shiller Cape ratio there in some ways. We can see it climbing up. And the bottom of the market after the GFC, the global financial crisis, the great financial crisis, was around March 2009. And it's been really going up, the stock market, since then in a long, long bull market. All right, so this article here I think is pretty interesting. The biggest risk threatening this high-flying stock market. Corporate earnings are surging, economic data are solid, and oil prices are tumbling in the wake of the interim US-Iran peace agreement. Well, that's like kind of day to day, week to week. US stocks have the wind at their back and new records within reach. No major crash along the way since the great financial crisis, the global financial crisis. Yet lurching drops in some recent sessions betray investors' underlying jitters. Many note that big rallies tend to precede a slide. Once stocks have logged huge gains, the question becomes, how much further can they go? And that's always the question, right? And it's impossible to predict. Even though I showed you that Cape ratio, it could go well above the dot-com bubble high. There's no reason where it couldn't go to 50, 60, 70, 80. I think, in Japan and that stock bubble and real estate bubble really at the same time, I think it went way higher than that. So there's no rule about how high it can go. At a time of unusual optimism, with SpaceX shares soaring into orbit and big tech companies plowing hundreds of billions of dollars into the artificial intelligence build out, here are some of the biggest risks that investors are monitoring. Yes, so this is really the key here, I think, to this. What I think is a bubble is that plowing hundreds of billions of dollars into the artificial intelligence build out. And so I think investors, especially retail investors, are thinking at the moment that this is infinite, that it will just keep going, bigger and bigger. This will not end. There won't be a pullback, but there are a number of reasons that could be a pullback. A lot of people don't look at the downside risk at all. One of them is that the data centers won't be being built as fast as they say. And someone like Ed Zitron has pointed that out after looking into it. And I've done videos about what Ed's been saying. That's just one of the risks. And the dot-com bubble with Cisco, there was a lot of money poured into internet infrastructure, and that did get built, but it was overbuilt. I mean, it's not all the same, but it could rhyme. And some people have been looking into the data. I think Jim Chanos said that there's more money on a national basis, GDP basis, being poured into the AI infrastructure as there were in railroads, and that was a bubble. The S&P 500 has already delivered double-digit returns in each of the past 3 years and is up 9.6% this year. So that's pretty notable in itself. That's a pretty good streak of gains, leaving many investors skeptical that the current pace of gains is sustainable. And the fact that people are skeptical, jittery, I mean, there could be many things could happen from here. That's why I'm not predicting that it could go down for 20, 25% and then go up higher than it was before. It's just no way of knowing, but there's some good signs to look for. Optimists note, for instance, that S&P 500's forward-looking price-to-earnings ratio has actually declined this year. That is because as much as prices have climbed, expectations for corporate profits have risen even more. So let's see some of the things they say. Higher rates is another reason. AI jitters. Here we go. Even if the Fed does raise rates, some investors believe that it would hardly slow a market propelled by the historic AI build out. So the dot com bubble had a historic internet build out with routers and fiber being laid. Really, they were talking about the backbone of the internet being laid. So, there was no stopping it. It was going to be huge. It was going to be global. And it was, but there was still a financial bubble involved in that, right? So I do think that this parallels here, that it's rhyming. Spending on data centers and other AI infrastructure this year by just four big tech companies is expected to total more than $670 billion, a larger investment as a share of the economy than the railroad expansion of the 1850s. There you go. Is that sustainable to get bigger and bigger every year? Is that going to be infinite? And what happens when the orders slow down? What happens then when there's so much expectation of growth? Still, questions linger about the foundations of the investment boom. In recent months, many investors were excited by the news that the AI startup Anthropic was poised to turn a quarterly profit ahead of expectations, a sign that the financial rewards of running AI models outweighed their hefty costs. However, that news was followed quickly by a Wall Street Journal report that Anthropic's competitor OpenAI is considering drastic price cuts. Does this end in price cuts? That's another risk, right? Where prices go down for AI ahead of similar reductions that the company expects at Anthropic as businesses balk at the expense of AI usage. So that's another threat. So, stock supply is another risk. One result of the AI driven stock rally has been a big uptick in equity issuance. So, this is something new with companies that need cash to fund AI investments, taking advantage of the opportunity to sell shares at higher prices. SpaceX, we could say there. And even Google has been doing that too, which is really amazing considering how much cash they actually have. These companies are just putting so much, just huge capex. And who's getting the revenues from this? It's the companies that are building the stuff that produce the components and the chips. And we'll look at that. That's the stocks we're going to look at that have had parabolic moves because of all the money going into it. But is it sustainable? Are people looking around the corner, looking ahead at what might happen next? Maybe retail investors in particular are just looking at what's happening now, not necessarily looking into the future, which really is what investing's about. So this one here, the AI industry is panicking. Is the AI bubble bursting? They are desperate to gain US government backing, and they are pushing some of the most overpriced IPOs in history, despite all of their companies being closer to a cash bonfire than a financial business. This is peak frenzy behavior, he says, the kind of stuff you see right before the bubble bursts. Well, I can't pick a time. It's just these things can go on for much longer. We just don't know. It could be today. It could have already started. It could be in a year or two. These things can go on. And it's hard to pick the top. And if it goes down 10, 20%, people are so used to buying the dip, retail investors buying the dip for years, and that's worked out. It is a thinly veiled, desperate attempt for them to fund a stooge of a bag holder and cash out before the entire thing collapses. As I said, if you're looking for predictions on timing, I'm not going to do that. And we're going to get into some of the companies now that I think have made massive moves and look pretty suspicious. Before we do that, I really would like to ask you to, if you're watching this on YouTube, to hit that like button to help the algorithm to spread it to more people. That would really help. Okay, so let's get into some of these companies quickly. So this is Cisco Systems. We're just going to look at the stock graph and some of the key metrics. I'm not going to get in the weeds here, but Cisco Systems was the poster child. And you look back here in that dot-com bubble, and that looks small now if you look back, but that was the whole dot-com bubble there, and it crashed down. So that's a classic bubble. And really, it took till 2025, I think, to get back to that. So this is the danger. Imagine if NVIDIA did that and just took that long to get back to where it was, for instance. But it didn't go bankrupt. And so here we have Micron Technology. Look at that move. Now, you need to be watching video to see this. Look at that parabolic move that it's had. If we look at it, it has been since April 2025, about then. It's just gone straight up. And I was talking with somebody on social media today, and they were in favor of, and Ross Gerber, who's kind of well known in Tesla, who's become skeptical of Tesla, he thinks that it's just catching up because people have realized that it's not cyclical anymore. And so this is a justifiable move. And we look at the PE ratio, price to earnings, is 11.86 on here. That's the next 12 months. Last 12 months is 18. So people say that's pretty low. But what happens is if there's a pullback in orders, that can change pretty quickly, which is what happened to Cisco Systems. I think Jim Chanos said that orders fell back 40%. That happened pretty quickly, and that changed the outlook on things. And here we have Palantir, which is interesting because it already has pulled back about 35%. Michael Burry, who was involved in the Big Short, has been talking about this, and he's been shorting it pretty much since the top. I don't know if he's still got the short on, probably, but that had a big run up, and that was the talk of the town a few months ago about how expensive it was, and there were people justifying it. There's people on YouTube like Amit, who is in the Palantir community, well, I think he did say it was expensive, but it was all justification. But even Peter Thiel, a while ago at the All In podcast conference, I heard him say that it felt like 1999, and that was like a year ago, I think, or in 2025. And he's one of the founders, the co-founders of Palantir, which I found interesting. But people tend to ignore even people like that when people involved in the actual company say that it feels like 1999. Okay, so NVIDIA here, a lot of people will argue with this because the earnings and the profits are amazing. They really are. But again, as I said, these hyperscalers, the Mag 7 companies buying chips, what if it slows down? What if that buying slows down? What if the capex, which is into the hundreds of billions of dollars this year alone, and if that slows down, what's going to happen to the stock price? As soon as they announce, say, in an earnings call that there's a slight pullback, if data centers aren't being built as fast, it's just gone pretty much straight up. Since ChatGPT was released, it was well positioned to take advantage of it, right? But let's get into some of the other companies. Monolithic Power Systems, look at that. Another parabolic move really recently. Next 12 months, 60 PE ratio, and last 12 months, 110. Enterprise value to revenue, so we're talking about sales here, of 18.96. That's pretty high. So Applied Materials, we can see that move again. So check the date again, around April to June 2025, a really steep climb up. All of these companies in that same sector have had big moves. Applied Materials provides materials engineering solutions, equipment, services, and software to semiconductor and related industries. AMD, Advanced Micro Devices. Look at that move. Look at that move. This is actually March 2026. So a lot of companies involved in the sector have had a massive jump in the last couple of months. Broadcom, again, people would argue that there's reasons for this, but these are big moves up in the past year or two, or since ChatGPT, since this AI boom started. Look at this one, Marvell Technology. Look at that parabolic move straight up. PE of 68, last 12 months over 100, EV to revenues 21. So again, what happens if there's a pullback in orders for any of these companies, right? What's going to happen? The AI, the data center, the AI boom is going to be infinite. I mean, that's what the bet is, right? That it's going to reach AGI, and it could happen. Like I'm not saying that that couldn't happen, but investing about probabilities, what's the probability that this will continue to infinity? Applied Materials, same thing. And KLA Corporation, I mean, that was really from 2019. It's done well, but really it took off at the same period of time. We can look at the PE ratio 56 there. Bullish people would say there's reasons for all this. We have Lam Research, another one. The stock graph looks pretty much the same. And if we look at the date, same thing. So is this a sign? Michael Burry has often said that parabolas don't resolve sideways. I'm not saying what to do about any of these stocks. I might trim back on things if I really like the company very long term and it gets to an egregious price. I don't like that situation of having to make a decision about what to do, and I think it's a bubble. People bring up Amazon, right? It dropped 92% after the dot-com bubble, but if you just hold it all the way through and even added to it, right? Added to it after the crash, you would have been fine over the very long term. I like to think long term. But anyway, let me know what you think about this. What do you think? Is this looking like the dot-com bubble? And I've been talking about it, but it's looking more and more like that over time, if you ask me. But anyway, let me know what you think. And right now, I'm going to put a related link on screen. Do go and see that now if you want to. And also put a subscribe link on screen on YouTube. And as always, if you're on Spotify, do follow to get podcasts in your podcast feed there every episode. Elsewhere too, an audio version, but this is good for video, as you can see these graphs. Okay, thanks for watching this one, and I'll see you in the next one.